Greetings, Jedi traders. David here of TradingFibs.com to bring you the daily trend for December 3rd, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. December it is. What a month. Contract rollover. FOMC coming up in a couple weeks. ECB monetary and OPEC meeting tomorrow. As we roll through the month of December and looking at the major indices today, focusing on the NQ, we'll take a look at the other major indices today at the end as to what was the daily trend. Here, opening up or pre-market session, closing out yesterday just under that fib target, 127%, 47.30.50. Plenty of room to come down. It was all bullish pre-market, as we saw the bias has been for a while, finding support on the 50 daily and weekly picture and monthly over here on the right, and the left picture here on the overnight session already pointing down to the bearish. Slight technical bias, finding still support at the 144. So it was anybody's game. Overnight session, pre-market session, never indicative of where the daily session will go. And that is our overnight session there, as we saw a lift, a lot of chop sideways, waiting on that ECB monetary policy report, and down it came, and boom, right back to the upside. And that is how we finished today, NQ to the downside. It was that post-European session that just drove it down. Nice little lift about 45 minutes to the European close, completing that upside movement that we saw in the pre-market. And it was take it downstairs for the remainder of the session. I want you to take a look here down at the bar at the bottom. I want you to notice what color that is. As you can see, a lot of re-entry points up here on the top chart. 534 second chart. More sporadic on the third chart, bigger time frame, 20-tick chart versus the 10-tick chart up here. And then finally, the 5144, all in the red. What did that look like? There you go. Take a look at that chart right there. Talk about what it takes to remain in the trend. Now, I'm not saying, hey, the beginning of the day, that's where we're headed. I have no idea where we're headed at the beginning of the day. All I can tell you is that this is a great market internal of several to give me a technical bias of, are we in a bullish or are we in a bearish trend? Today was all about the bears until the very end. We got a little bit of lift as we saw the 5144 closing in. You could see the numerous times that price action bounced either off the 50 or off the 144 or never even came close, and that gap continued to widen, offering numerous opportunities for the downside. So, while the first entry from the session was great to the downside, it doesn't mean I would have been able to stay in it, as most likely a stop would have been taken out at break even, but then on the resurgence back to the downside, offering an opportunity. Let's jump right into the first setup of the session. It was right here, post 2 minutes, sell signal on the T3 moving average crossover. Why is this a nice golden standard setup? There you go. You're in the red. You're in the red on all four charts in sync. Being that it's 2 minutes post-open, we're not exactly jumping up on the tick count. Many times I like to watch that tick count at least be under 225, 400. But it was right from the get-go. Again, I'm taking this picture a little bit delayed, so actually the first bar was slightly down. But it was the AD line that was still showing upside. So not, while we saw in the couple past sessions, the AD line just being another market internal to keep us in the trade. It was not the market internal from the get-go. The market internal was upside here on the 1 minute chart, as every 30 minutes we change it to eventually a 10-minute chart. But it was right from the get-go, sell signal to the downside. First setup of the session, 20 tick to the downside. Price action broke underneath the 50. You see it couldn't find to break upside above it, so that was a confirmation to remain in the trade to the downside and a confirmation for entry. Setup number one, also confirmed on another market internal, the Fibonacci targets, drawing them from pre-session, from the high to the low. Seeing that price action here at the 61.8 was rejecting there right at the market open, and as you can see here, coming down. It was setup number two. that we were looking at. Here we have the volume profile, price action again in the first 10 minutes here, staying within the 70% range. Here was that first bar down. Second bar not being able to break value area low. And there it was, setup number 2 to the downside. This is post 10 minutes of the open. Again, first setup we saw on the first chart. Come back here. Again, this was post 2 minutes. Price action came down, actually bounced back up. If we go back to the bigger chart here, we saw on the market open right up here, that was that move down, and then price action bounced back up. And then looking for the next opportunity to the downside, we're looking at this section on the close-up here. So again, that was setup number 1 right there. And finding that support, as we saw price action came down here, offered another sell opportunity here. So this was actually setup number 2. So if I go back here again, this is setup number 1. Price action came down here and actually bounced back up, as we saw the AD line was bouncing back up, but was keeping within the value area. That's that green candle right there. So price action not coming down anymore, not able to break that value area low. That was that setup right there. That's setup number 2. And you're looking at this and saying, yeah, that looks great. Heikin-Ashi bar downside, all 4 charts in the red, right? Well, no, that was not a good setup because price action was holding within that value area right there. And I would have held off from taking that entry at that point. So price action bounced back up, and then right here, as price action then solid bar, we had already closed out the daily gap on the setup number 1. Price action here, setup number 3, solid Heikin-Ashi bar, tail down. Now we saw the AD line turning around. We saw a tick count deep in the red here, 389. We see price action. There was that lift right there, almost to the 50-period moving average, but again, price action continued downside. So again, we mentioned from the beginning, yes, it would be great if we could determine with a crystal ball that price action is going to run downside for the remainder of the session or vice versa on an uptrend day. But we don't know that. So you have to use your trade management. Your trade management is you place your trade, you let your contracts run, take it off at a certain predetermined point. You got to move your stop to break even. If you're taking out, you're taking out. If it runs far enough away, you keep your stop further back. You could stay on a trade like the 5144 chart that we just showed you back here and remain in the trade for the remainder of the session. But that's not how I manage my trade. So if I'm stopped out, I got to look for the next setup, and that's what happened. So stopped out on the setup number 1, waiting to get into setup number 2, which never happened because price action never broke out of the value area here. Had another little bit of lift here, but then all market internals coming back downside, all in the red, and 50 below the 144 continuing the trend. So there's setup number 3 as it rolled all the way down, offering several opportunities for re-entry. As you can see, some heavy-duty candles here, possibly taking out one on the break-even, might even having to go to a 6-3 versus a 10, or as we call a 10-tick range chart versus a 5-tick range chart, a smaller time frame. Either way, the trend was to the downside, 50 below 144, and there it was on a 20-tick, all in the red, as the AD line was also holding downside. Here we see still on a 1-minute chart as we are in the first 30 minutes of trading, and you can see the tick count really not pushing up into the green, but mostly staying in the red. And there we went, right down to the previous low, closing out the former VPOC. Globex low sitting down below, thinking, yeah, that'd be great if we came down straight shot, but nothing ever comes down as we want it to go. There it was, price action, as we saw breaking right there, the value area set us up for, that's right, setup number 4 again. Econ data release here at the top of the hour. Price action a little bit choppy here, but it was here on the sell signal downside, setup number 4. Again, you might have been in setup number 3 had you had your stop at the swing size, but you already probably had some contracts off. Price action would have come and taken you out. You look for the re-entry, not looking for anything to the upside. It was the sell signal here, breaking the previous low, and now the naked VPOC, which has now been closed, breaking the Globex low down here. AD line is breaking the pivot line, 20 tick, and that's right, the 5144 still in trend. Look at that tick count, 821. 51.44 is in the red. So setup number 4, go back. What are we waiting for? We're waiting for breakout of the value area. Again, setup number 3 has been closed out because price action most likely bounced back up and took your stop out. So you're looking for the next setup on the econ data release. We saw that little lift there, and there's the chop, and then boom, sell signal downside. You might have been taken out here, or possibly just waiting for that econ data and waiting for market action to finally break the value area, and we came downside. So that was the better of the entries. Even though that one was a good one, this one would have been the better as price action broke from that value area right there. And there she went downside. Price action rolling down here, getting a little bit of a pullback. Stop up here at break even, or perhaps you trailed it down and you're out. You saw price action on the tick come back up, but AD line is down, 20 tick is down, and 50 below the 144 as we run down to the cam low. And again, big picture here, we see on setup number 4, it was the Fibonacci resistance. Again, if you look at you're using your Fibonacci retracement, you say, all right, there it is. That's the market open rejection at 61.8. Another market internal together with the 51.44 here on the right-hand side, plus the 20 tick to say, yes, this market is in a downtrend. Rejection at the 61.8. Now, I don't know at this point that I might come all the way back up here. I have no idea. But I do know that the technical bias right now is to the downside. As we saw the little lift here, I went ahead and drew a fib retracement, looking to see my stop is up here at break even, and seeing if price action will retrace or break that 61.8, creating a price action move back to the upside. And all I saw was resistance once again from a smaller time frame on a 10-tick range chart here, 61.8 to the downside, offering another opportunity to the short. Had your stop not been taken out, you would have just managed it. But if you had been stopped out, here's another re-entry. Look at that tick count in the deep 700s. 50 still below the 144. And look at that tick count, even though it changed green here on the 20 tick, price action now moving downward. So looking good that we're back in the downtrend. We've already broken the pivot and the negative 750 line. So perhaps now we go get the cam low. What does that sound good? There it went. Right down to cam low, another trade, setup number 5 to the cam low. 20 tick range chart on the right hand side with the 51.44, and again, deep in the red on the tick chart, and we're still holding down on the AD line. Not looking for any entries, not looking for any scalps to the upside, looking for the confirmed entry on as many charts as possible in the red. And there it was, post 75 minutes of market action. We had our first setup again over here from market open. A little bit of chop. That again, you could have taken that, might have been stopped out. Beautiful setup to the downside. Again, might have been stopped out, but if this was that 61.8% retracement, gave you another opportunity to the downside, and then we just ended in a chop, most likely stopped out. You just didn't want to sit in this. Again, if you were trading on the bigger time frame, the 51.44, you might have remained in the trade. But here, most likely you've been stopped out, perhaps taking a little bit of scalp entry on some of these sell signals down here, or maybe just waiting to say, you know what, I'm going to see if we break the cam low or we break back to the upside. And that's what we did. We broke up to the upside. All right, so cam low was holding it, thinking, all right, price action may just go ahead and back upside. And there it is. Now we're into the European close, post 45 minutes to the European close. And there it went. Buy signal to the upside. 534. Your 20 ticket is back to the upside. Now you didn't have the price action break above 50, so I most likely sat out of this knowing that my pivot is coming up as well. And that's what I did. I sat out of this setup to the upside because I had too many things working against me. Still believed that 50 was still below the 144, thinking the technical bias was going to continue downside. But again, not a bad entry. Crossover 534 with at least a 20 tick in your favor. That's a good entry with a tick count above 400 and an AD line turning upside. But again, resistance here. So what I would look for here at this point was a pullback and then a re-entry to the upside. And so we got a little bit of chop. You draw yourself a fib extension. You have a fib retracement of 50%. And now you got yourself a fib extension. And there it is. There's the buy signal. Again, still a little bit cautious that we're here at the pivot, but 20 tick is upside, but we are finding support here at the 50 period moving average on a 1 minute chart. Target 79.63 up here. And that's where she ran. There it is. 50% retrace. Price action up to fib target 1. Still holding here at the pivot. Tick count is strong. Price action found support at 50. So it made that trade here worthwhile to get into, to get to the upside, to get some ticks. Not the best of entries, but very tradable. And there she went, right to value area high. Holding there at the pivot. 20 tick, still all in the green. Price action right at the 144. But at this point, your stop's at break even. And what do we have here? Again, we're still looking at a European close here and price action moving upwards. So you're going to go with the trend. And that's what she did. She went all the way up almost to the daily gap. And now here with all contracts in the green, you take your first contract off and you manage your stop on the way up. As we see, price action broke above the pivot, 20 tick now, and we're holding above the 51.44 after that support here. This is that support that said, I thought and I saw that price action might continue to the upside at that point. I don't know how much further it's going to go. All I know is that all I saw was green, green, green. I'm going to keep all contracts on. As soon as I get my first red candle downside crossover, that's when I take my first contract off and I move my stop up. And so price action did retreat. It would retreat to a 50% Fibonacci retracement level. Still all things in the green. Price action finding support here at the 144, but I'm starting to notice that the pivot is not breaking up high. AD line is not really holding above that pivot. So at this point, I got to ask, where am I going to take that contract? Where am I going to take that runner off? I got to have somewhere where it says, that's it. I'm not going to let it come back to break even, but I'm going to take it off at some point that says that's my line in the sand. And my line in the sand was going to be, at this point, if I broke below that 50%. And so we can see right now, price action ran back up to the 61.8 once again, pre-European close, and bounced back down. So I didn't see it really running up any further. And so price action retreating here. Once it broke the 50, I said, that's it. I'm out. Setup number 6 is done. As I saw the failure here at the 60% line. I'm sorry, at the pivot and the 50 and the 144, I saw the failure here and said this trade is over. Okay? All right, moving on. Price action moves to all the way down. Again, this was the initial setup to the downside that we were going to see just a huge move, not only on the NASDAQ, but the other indices. And again, for the majority of this move, for whatever reason, I sat out. That's okay. Nothing wrong with it. Still a valid setup. Encouraging trading room members that the setup is valid. You got all 4 charts in the red pretty much here. Price action breaks underneath the 50. Again, I was pretty much looking for a pullback at this point and maybe a re-entry. But a valid setup right here. Setup number 7 to the downside. And there she went all the way down. And again, this setup over here at 11:30, that's European close already, and the market decided to, that's right, take it down. And there she went, right down, 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 down. Again, this is all on a bigger time frame as we came right back down to the cam low. Very nice. Now, at this point, you ask yourself, all right, there's another setup forming, another re-entry point. That's right, rejecting the 61.8 already, and we're holding downside. This thing has perhaps more room to go. And she did. Right there it went. Setup number 8, or setup number 7, the entire move, setup number 7, if you were just managing, setup number 8 right here at the lunchtime hour, and see that reject at the pivot, 20 tick downside, 50 below 144, and tick count still in the red. All right, so here's setup number 7. If you had taken the pullback or a re-entry, and it's still continuing downside, all charts in the red. Price action rejected at the pivot, supporting the technical move to the downside was all in the buys, keeping you in the trend. And there she went. There it is. There was setup number 7, re-entry 8. Thinking, yep, we might be going down to that open VPOC at 4609.75. What's going to stop this now? We already had the reject at the 61.8. Price action came all the way down, and unfortunately, what did it do? It bounced right there. That's right. It bounced, but I had taken that entry on setup number 9. Well, that's the bounce there. And coming back down for setup number 9 to the downside, thinking we'll go down to the VPOC at this point. All right, 23% retracement there at 12:30 Eastern Standard Time. All right, that's that move up, rejected to 23%, and then we get a sell signal to the downside, still in a downtrend as we see the 20 tick and the 50 below the 144 in a red Heikin-Ashi bar. That was a go. And so open VPOC down here below, still moving down, first contract off, and only a couple ticks shy. Thinking, well, at what point do I take my runner off? At some point, do I break above the 50%? And I took it off. Yeah, I don't usually like to let it run that far, but again, I decided that was a good place. I wasn't going to lose, as I wasn't going to let it come back to break even. So price action breaking to the upside here on the 20 tick, but still watching the 51.44, seeing if there's going to be any resistance there. Setup number 9, a good one down to the VPOC, still believing that somehow the NASDAQ was going to come down and grab that VPOC. And where we get another re-entry point here. Setup signal downside. Again, this move up at 115 only gave us another opportunity to the downside here a little bit later. Again, waiting for a pullback entry. This time, what I'm seeing is price action pulling upside. Fibonacci draw here to the 61.8. Said if we break that 61.8, and again, I'm talking about this move up, so drawing a Fibonacci retracement to the 61.8. If we broke downside, I said that was the signal to the downside, and that's where I was going to go downside in the target, first target, or take off all the contracts at the open VPOC. Why did I say that was a good entry? Look at that. Right there, I saw the reject on the AD line of the 10-period moving average. I have a tick count deep in the red. I see the reject here on the 50-period moving average, and I see my 20-tick bars already turning downside, and I'm below the 50-period moving average. Solid setup right there, all the way down where? That's right, both contracts off at the VPOC. Deep in the red. Now, at this point, it was either another pullback entry, or at this point, it was you stayed on the trade. And here we go, back downside, another re-opportunity as we continued price action on a 23% fib retrace to fib target 1. We're still downtrend. So at this point, you're just looking for multiple opportunities to get back in to the downside. And there, again, another re-entry point. Solid setup. All 4 charts in the red, or you're just continuing to hold on to this and you're just managing it every single higher, lower high or swing size position. But reinforced on the right hand side here on the technicals, resistance at the 10 AD line downside, 20 tick downside, 144, 50, 144 downside. Tick count for the majority of the moves still in the red, and just looking for other possibilities of re-entry. And here we are rolling down to an open daily gap, deep down 45.70, together with some open targets below. And unfortunately, it was a flat trade in 11 ticks, back up and taken out. Thinking we might come down to open daily gap. Now, the mistake I had made is right there. That was a daily 61.8% fib. I should have drawn on my chart, and that's why we got that bounce. All right, no loss, flat. Price action back to the upside. Again, you're starting to have a turnaround on the, again, bottom fish feeders looking for market action to pop back up. Not a bad place to get back into the long. Price action broke above the 50. T3 moving average crossover, 20 tick, Heikin-Ashi bar. You got an AD line going green. This might be another opportunity to get into the long. There it is, back to the upside. Or wait for a pullback, or all contracts off. Everybody's got their different trade management, but that's a solid entry back to the upside. Not the best of entries, but good enough knowing that price action was now back above the 50-period moving average. Watching the 144 here, you got a 20 tick that's in trend to the upside. Maybe this is the bottom for the day. All right, and so that trade was over at about 3:15 there. Unfortunately, it came back down and started chiseling, and then you just had to look for another opportunity. Again, whether you shorted to the south here because price action was coming back down underneath the 150 period moving average, not a bad entry. 20 tick was back upside. And again, AD line was trying to manage to break above that 10 period moving average. So again, another solid setup here on the buy signal as price action, but it being a little bit cautious here as you were approaching the 144. So again, at this point, you're asking yourself, well, what is the entry I'm looking for that's going to put me into the trend, the long trend? Is this the bottom, and are we going to go that much higher? Well, it was pretty difficult. We may have been testing the daily 61.8% again. Again, this might have been an entry downside you were taking out. Again, the crossover that I'm looking for, not like this in the middle of the move. I'm looking for these initial moves. So the one in question here is, why would I take this one? Well, you got a buy signal, you got an AD line that's going green, you got a 20 tick upside, and you got a price action breaking above the 50. So you take it off at a certain point and let your runner go. And that's where she ended up. On the first move, a little bit of pullback, a little bit of chop, and then upside as price action kind of held right there, the 10 period moving average, but 20 tick was upside, and there, after multiple attempts to break upside, finally held above the 51.44, and we almost had a crossover here at the end. Closing out the day here on the NQ, it was 339 ticks for the day. 339 ticks on the day with let's see how many trades that was. 339 ticks with a total of 16 trades. Split that, 2 contracts, so about 8 trades in total, 1 loss, and 15 winning trades, or 8 winning trades, and 1 loss, for a total of 339 ticks. All right. Taking a look at the 20 tick here chart, just want to reinforce the market internals. Again, it's knowing your bigger time frame that keeps you in the trend. Here we saw the morning session that might have kept you out of some of that chop. Again, here was that European close here, reinforcing the move to the upside. That was some healthy ticks there. And then the majority of the afternoon session with the 20 tick keeps you out of that smaller time frame. And from an entry above here around 46.70 all the way down to 45.80 was some really serious ticks for the day. Again, for whatever reason, I sat out of this section, and it was this section that I was able to get into some entries all the way downside. And pretty much towards the end of the session, pretty much staying out of some of this chop. But again, some good moves to the upside on the 20 tick crossover. And that was your big picture for the Fibonacci. Rejection from the initial start up at the 61.8 all the way downside. With a little bit of pullback here to the 23%. And then finally breaking upside. Eventually we can always come up back here to the 50%, come back down. Who's to say? But the big picture here was the rejection at the 61.8 that just led the entire session downside. Here, looking at the volume profile, again, most of the majority of the time spending up here around 46.60, and then the point of control down here at 46.4, leaving us with a volume profile which was quite impressive here, taking out former points of control. As you can see, for the past couple weeks, we've been just hanging out here at the highs, but in today's action, some deep selling here. Again, volume profile, how much time, not much time, but how much volume was traded at a certain price level. So keeping in mind that 46.04, it was the majority of price action today. And so we started today's daily trend here with a picture that was showing mostly bullish, still showing mostly bullish here, but price action now bullish neutral as price action breaking down below the moving average here. Still on a daily, we're still upside, even though we've had a small retrace. Once we break this 50 period moving average, then we'll go to a bullish neutral until we fully cross back a downside as we had back in October, but still bullish on a weekly. But for the short term here, bearish, and now back underneath the 144 putting us in a bullish neutral this position. But what I want you to remember, take note that we showed here in the chart earlier was that support at that 61.8, that full retracement that we saw. That's right, that was the beginning or yesterday's end of session on that 47.30 up there, coming all the way back down to 61.8 and finding support there and bouncing back upside. That was a key line that I most likely should have had on my chart there that would have showed me support on that one move that kept me to the that had flattened me out on that trade. All right, so let's take a look at some of the other indices as we see here on the Russell. Again, mirroring the other indices, same move to the downside. Here we have a 10-tick range chart. Again, not the best of entries here, but it was that afternoon setup after post-session of the European close. Setup number 1, setup number 2 might have stopped you out. Setup number 3 for the remainder of the trend on the Russell. Taking a look here at the YM, trend move downside. Again, maybe not the initial entry. Pullback most likely here at the same time on a smaller time frame to the downside. Again, small chop that we saw all around on all 4 indices, but it was in that late move taken to the downside on all 4 indices. And together we saw the same thing on the ES. Maybe not the initial entry, pullback entry over here, post-European market chop session, and there was that afternoon session all the way to the downside. And even on the crude, finding a pocket as we lead into the OPEC for tomorrow. Price action moving to the upside here after the market. This was about two hours of the session. To the upside, still from the bottoms of the 40s into the 41. And so that's where we wrap up the NQ for today. Who knows what leads into tomorrow? Feel free to stop by tradingfibs.com or in my social media outlets to obtain more information. My trading mantra of one simple strategy: any market, any chart, any time frame will keep me disciplined, keep you disciplined hopefully as well. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Have yourselves a blue zone day, good night, and good trading.